Hey everyone, welcome to today's podcast. If you're someone who's preparing for record to report interviews at top companies like Accenture, Genpact, EXL, and Capgemini, you're in the right place. Today, we have a mock interview setup where I'll be asking our two-hour interview questions, and our guest, who's a well-prepared candidate, will answer them with tips, examples, and techniques you can use in your own interviews. So stay tuned till the end. It can truly boost your confidence and help you crack your next interview. Let's start. Can you explain what record to report is?
Sure, record to report or R2R is a key process in finance and accounting. It involves collecting, processing, and delivering relevant, timely, and accurate information to stakeholders. The process includes recording financial transactions, performing reconciliation, preparing trial balances, making necessary adjustments, and generating financial reports like profit and loss statements and balance sheets. It's not just about bookkeeping. It ensures data accuracy and provides insights for management decision making. For example, if a company purchases equipment, I ensure the correct journal entry is posted under fixed assets and also verify its accurate reflection during monthly reporting.
What are the major steps involved in the R2R process?
Record to report can be broken down into several important steps, like data collection, gathering all financial transactions, journal entry posting, properly recording them into the accounting system, reconciliations, including bank, intercompany, and GL reconciliations, adjustments and corrections, such as posting accruals, prepayments, or correcting errors, trial balance review, verifying balances for accuracy, reporting, preparing financial statements like P&L, balance sheet, and cash flow statements. Each step is crucial because even a small mistake early on can impact the final reporting.
What is the importance of reconciliations in R2R?
Reconciliation acts like a health check for accounts. It ensures that the balances in the accounting system match the actual figures, whether it's bank balances, intercompany accounts, or vendor customer balances. For example, in a bank reconciliation, we compare our company's cash book balance with the bank statement. If there's a difference, like outstanding checks or direct bank charges, we identify and adjust it. Without reconciliation, incorrect balances might be reported in the final financial statements, leading to audit issues or poor business decisions.
What do you know about month-end close activities?
Month end close activities involve tasks necessary to officially close the accounting period for that month. This includes recording all invoices, expenses, and revenues, posting accrual entries, running depreciation for fixed assets, performing bank reconciliations, finalizing intercompany settlements, reviewing trial balances, preparing financial reports. Most companies have a deadline to close books by the fifth or sixth working day of the new month.
What is an accrual? Can you give an example?
Sure, accruals are expenses or revenues recognized before they are actually paid or received, following the accrual accounting principle. Recording expenses when they are incurred, not when cash is paid. For example, if March salaries are paid in April, we still book the salary expense for March in our March accounts.
What is a prepayment?
Prepayment is the opposite of accrual. It's when we pay an expense in advance for future periods. For example, if annual rent is paid in January for the entire year, it can't be expensed all at once. We record it as a prepaid expense and then amortize it month by month.
What is the difference between P and L and balance sheet?
Profit and loss statement shows income and expenses over a period, indicating the company's profitability. The balance sheet, on the other hand, shows the company's financial position on a specific date, detailing assets, liabilities, and equity. In simple terms, P and L is like your how much you earned and spent report, while the balance sheet is your how much you own and owe report.
What are fixed assets? How are they recorded?
Fixed assets are long term assets like buildings, machinery, and computers that generate income over several years. When we buy a fixed asset, we don't expense it immediately. We capitalize it, recording it as an asset, and gradually expensing it through depreciation over time.
What do you mean by depreciation? Why is it important?
And depreciation allocates the cost of a fixed asset over its useful life. For example, if a machine is purchased for 1 lakh rupees with a 5-year useful life, we expense 20,000 rupees annually. It's important because it matches the asset's cost to the revenue period it generates and ensures the balance sheet correctly reflects the asset's reduced value.
What is intercompany reconciliation?
Intercompany reconciliation involves matching transactions between two or more entities of the same parent company. For example, if company A sells goods to company B, A should show a receivable and B should show a payable. Before consolidation, we reconcile these to ensure both sides match.
What challenges do you face during month-end close?
There can be many challenges, such as missing invoices, late adjustments, tight deadlines, system errors, reconciling large data volumes, or dependencies on other teams for information. But strong communication, planning, and checklists help a lot.
What ERP systems are you familiar with?
I have worked on SAP and Oracle. I'm comfortable posting journal entries, running reports, doing reconciliations, and preparing trial balances on these systems. And I'm open to learning any new ERP as needed because the basic accounting concepts stay the same.
How do you ensure accuracy in financial reporting?
Ensuring accuracy in financial reporting involves multiple checks and balances. Firstly, I make sure that all financial data is collected and recorded correctly. Then, I perform reconciliations to verify that balances match across systems. Another key step is reviewing trial balances for discrepancies and making necessary adjustments. Lastly, I involve a thorough review process where reports are double checked by another team member before final submission. Having a structured process and using automated tools for error detection can significantly minimize mistakes.
Can you explain the concept of a chart of accounts?
A chart of accounts is an organized list of all accounts used in a company's general ledger. It serves as the foundation of a company's financial record keeping system, allowing for structured data entry and reporting. Each account in the chart is assigned a unique code. For example, assets might start with 1, liabilities with 2, and so on. This coding helps in easy identification and categorization of transactions.
What are the common types of financial reports generated in record to report?
Common financial reports include the profit and loss statement, balance sheet, and cash flow statement. These reports provide insights into a company's performance, financial position, and cash handling, respectively. Additionally, organizations might prepare segment reports, variance analyses, and management reports according to specific needs.
How do you handle discrepancies found during reconciliations?
When I find discrepancies during reconciliations, I first investigate the root cause by reviewing transaction details and supporting documents. Once identified, I make the necessary corrections, such as adjusting entries or correcting errors. I also document the findings and resolutions to prevent future occurrences. Communicating with relevant departments is crucial if discrepancies involve external parties.
What is variance analysis and why is it important?
Variance analysis compares actual financial performance against budgeted or forecasted figures, highlighting differences or variances. This is important because it helps management understand why performance deviated from expectations, enabling them to make informed decisions and improve future planning.
How do you prioritize tasks during the month end close?
Prioritizing tasks during month end close requires a clear understanding of deadlines and dependencies. I start by listing all tasks and their respective due dates. Critical tasks that impact reporting deadlines, like reconciliations and adjustments, are prioritized first. I also allocate time for unforeseen issues, ensuring that all tasks are completed efficiently.
What is the role of technology in the R2R process?
Technology plays a pivotal role in the R2R process by automating routine tasks, reducing manual errors, and improving data accuracy. ERP systems like SAP and Oracle streamline data entry, reconciliations, and reporting. Moreover, technology facilitates real time data access, enabling quicker decision making and enhancing overall process efficiency.
Can you explain the importance of compliance in financial reporting?
Compliance ensures that financial reporting adheres to legal and regulatory standards, preventing legal issues and maintaining stakeholder trust. For example, adhering to GAAP or IFRS ensures consistency and transparency, which is crucial for investors and auditors.
What strategies do you employ to improve the R2R process?
To improve the R2R process, I focus on continuous process evaluation and enhancement. This includes automating repetitive tasks, refining reconciliation procedures, and ensuring efficient data management. I also prioritize team training and cross functional collaboration to foster a culture of continuous improvement.
How do you manage tight deadlines during the reporting period?
Managing tight deadlines involves effective planning, prioritization, and time management. I break down tasks into smaller, manageable steps and allocate resources accordingly. Regular progress tracking and open communication with the team help ensure that deadlines are met without compromising quality.
What are the key qualities of a successful R2R professional?
A successful R2R professional should possess strong analytical skills, attention to detail, and a solid understanding of accounting principles. Good communication and problem solving abilities are also essential. Adaptability to changing regulations and technology is crucial to stay relevant and effective in the role.
How do you stay updated with changes in accounting standards?
I stay updated with changes in accounting standards by attending workshops, webinars, and industry conferences. Reading professional publications and participating in online forums also keeps me informed.
What advice would you give to someone preparing for an R2R interview?
My advice is to thoroughly understand the R2R process and be familiar with key accounting concepts. Practice common interview and develop clear, concise examples from your experience. Confidence and clarity in communication can significantly impact your interview performance. Remember, interviewers appreciate candidates who are proactive and eager to learn.
Wow, that was a power-packed session. We covered 25 important R2R interview questions with simple and effective answers. If you are preparing for record to report roles, revise these concepts again and again, practice examples, and stay confident during the interview. Believe me, you're just one good interview away from your dream MNC job. If you found this podcast helpful, do subscribe and share it with your friends who are also preparing. Wishing you all the very best for your interviews.